Internationalization of the rupee is a topic that has gathered steam in the last year or so. Both the government and the central bank have taken many steps towards internationalizing the rupee. In today's episode of Open Dialogue, we focus on this topic and try to understand what internationalization means, how does it help both importers and exporters, and what implications does it have more broadly for all of us. Joining me for this discussion today is Neeraj Gambhir. Neeraj, welcome to the show.
Right.
So, Neeraj, let's first start with what internationalization means. What exactly, when people say we should internationalize rupee, what exactly do they mean?
So there are many dimensions to internationalization. First of all, is what I call as the trade dimension of internationalization, because generally, if you look at the trade, import and export of any commodity, a large part of that trade is invoiced in US dollars.
Right.
Right. So dollar is the dominant invoicing currency for the world. Many commodity prices are quoted in terms of US dollars. For example, oil. Generally, we think of oil price in terms of US dollars.
Right.
Gold price, we think of gold price in terms of US dollars. So effectively, US dollar has become the currency of international trade, right? Commodities are priced in US dollars, commodities are invoiced in US dollars, and commodities are, and the trade is generally settled in terms of US dollars. Some amount of trade also happens in, for example, euro. Some amount of trade happens in Japanese yen and some of these other countries, but by and large, a large proportion of the world trade happens in US dollars. It has many benefits to it, but it has many disadvantages to it. The biggest disadvantage is that everyone is very dependent upon the US dollar settlement system, right, for trade. And if for whatever reason the US dollar settlement system for trade is not available, or it becomes unavailable, then you have a risk, right? So there is a single currency risk that you have. Of late, many countries have started thinking about this risk, partly because of geopolitical reasons, and therefore want to have, their own currency as the currency of invoicing. So that's one dimension. So for example, if an exporter is exporting from India, then instead of invoicing in terms of US dollars, can he invoice in terms of rupees?
Right.
And I'll come to the benefits and disadvantages
Absolutely.
later. But right now it's just a change of the denomination from one currency to the other currency. Likewise for imports.
So, if you're let's say buying oil from the Middle East, then today we pay in dollars.
Yeah.
Neither the Indian economy nor the Middle Eastern economy is running on dollars. So, ideally, we would like this trade to happen in rupees.
In our own currency.
In our own currency. So that is.
So that's one dimension to internationalization. The second dimension to internationalization is we basically want rupee to become a currency of choice in some senses for people to hold it as an asset.
Right.
Right. So today, if you see, generally people are very comfortable holding US dollars because they know that US dollar is an international currency. You can go to any country, exchange it for the local currency. It is universally acceptable. Its value is very steady over a period of time. And there is a general faith in US dollar as a currency. You could say that to some extent about euro, yen, Aussie dollar, Canadian dollar as well, right? These are basically more internationally acceptable currencies in terms of asset, holdings.
So when you say asset, so as an example, India holds lots of dollar reserves.
But that's the international reserves in
Exactly.
the sense that is the reserve that Central Bank of India holds, or Reserve Bank of India holds on behalf of the country.
Right.
Right. But even individuals.
Even individuals, right.
Right. Even individuals, even companies, even businesses. Particularly MNC businesses, people who have businesses in many countries, right? If you ask yourself this question, what currency do they want to hold in general?
Right.
The answer would be US dollars, right?
Yeah.
And then to some extent euro, and to
Right.
some extent maybe some of the other currencies. Can rupee be one of those currencies?
Right.
And again, I'll come to the benefits and disadvantages of that later. But how do we make sure that both the dimensions of trade, international trade, and the dimension of international assets,
Right.
rupee now becomes a part of the equation, right? Which it has not been so far for all these years, simply because India was a very closed economy. Rupee was not a tradable, convertible currency. It was not a very stable currency. So all these dimensions have changed over the last, I would say, 20, 30 years. So hence, it is probably time for us to start thinking about rupee finding its place under the sun as far as an international currency is concerned.
Great. Very helpful, Neeraj. So, two dimensions, just to summarize. One is the trade dimension, and second is the asset dimension. And if rupee can be one of the currencies in which both of these can be done.
Yeah.
So, let me move to now this question of like why? Why should we internationalize? And there, Neeraj will be helpful to understand. There is the perspective of people who are conducting the trade. So, there is, let's say, an importer importing someone sitting in India importing something from outside, or there is an exporter who's sitting in India and exporting stuff outside. And then also there is the government and the central bank. We'll come to that separately, but let's start with just importers and exporters. Like, why should an Indian importer or an Indian exporter invoice in rupees and not in dollars?
See, when your substantial part of your costs are in one currency and your revenue or your income is in another currency, right? You always face a currency risk. Right. So if I'm an exporter, and let's say we think about this, and let's say I'm a textile exporter, right? And as a textile exporter, most of my cost is rupees.
Right.
It's cost of raw material, whether it is cotton, some other raw materials, right? Then the dominant part of my cost is my people cost, my manpower cost, that is all in rupees. But when I sell those textiles or the finished goods to a outside buyer, I will earn US dollars. Right? So the exchange rate between the US dollars and the INR can fluctuate. It can go up, it can go down. So as an exporter, it exposes me to currency risk. When I'm producing, the currency's exchange price may be X. When I finally go to sell, the exchange price can change quite dramatically. And as a result of it, my margins, my profits can actually be very volatile.
Right.
So from a risk management perspective, invoicing in your own currency is always the best thing to do because it doesn't expose you to any foreign exchange risk, right? Likewise for an importer, if you're, let's say, think about this, you're an oil refiner and you're importing crude. Crude is mostly, invoiced in US dollars and paid for in US dollars. But the finished goods that you are selling, you're largely selling it domestically.
Right.
The gasoline, the petrol, diesel, all the finished goods. So again, it's exposing you to a certain amount of exchange rate risk, right? And so if you were to pay for the crude oil in US instead of US dollars and rupees, your exchange rate risk is gone.
Right.
So from both exporter and an importer perspective, the biggest advantage of changing the currency of invoicing from a foreign currency like US dollars to our own domestic currency rupee is that it addresses your exchange rate risk problem in a big way. Then I think so that's the main advantage.
Right.
That's the key advantage of moving from a foreign currency to a domestic currency. The second is that, you are basically, think about this, and from an economy perspective, if we are buying in US dollars, we need to have US dollars, right? We need to find US dollars. And for us to get US dollars, we need to do something to earn those US dollars, which means we should be an exporting currency. But if our imports are going to be in rupees, our dependence on US dollar comes down. Right. So that's the other advantage at an economy level, at a broad level, which happens.
Sure. Also, I guess at the importer-exporter level, there is also some frictional costs, which is if you are kind of, let's say, selling in dollars and finally you need to pay everything in rupees, there is also an exchange involved. So there is some cost.
Yeah, so there is a transaction cost that you have to address, which is the cost
and
of
also
exchange.
I guess it brings along with it its own how should I say, documentation and other things that you need to take care of.
Well, my guess is the documentation you would still do. You will still do the letter of credit if you are basically selling to someone, whom you don't know very well, which is what a documentary credit is. Or if you're importing, then the guy who's exporting to you from outside may require you to open an LC. I don't think the documentation changes that dramatically. What changes is basically your worry about the fact that you are either paying or receiving in US dollars or any other foreign currency. how do you manage that risk?
Yes.
What is the best time to manage that
Yes.
risk? And then what happens is in many cases people get distracted. It's also a
Right.
distraction, right?
It is, yes.
That you're more worried about the exchange rate than you're worried about your core business.
Correct.
You've seen those situations as well, right?
Correct.
So it addresses that issue to a large extent.
Right. Great. So then, moving on to the economy side, which is one point you mentioned, is this, that we don't need to be, we don't at an economy, we don't need to be so worried about how much dollars we have. What other benefits does it have for the economy? Why is the government or the RBI so keen to internationalize the rupee?
Yeah. So the best way to think about this is US,
Right.
right? Because US dollar is an exchange, is a currency which is currency of international trade today, currency of choice. It's also a currency of choice for reserves, right? So both asset side of the dimension and the transactional sides of the dimension, it is sticking. US government can actually run a fairly large fiscal deficit and current account deficit without really bothering about how are they going to fund it.
Right.
Right? Because so much of the demand for US dollar is coming from outside of US dollar,
Right.
the United States, right?
Right.
You think about the holdings of US dollar assets by outside people. It's huge.
Yes.
Large. Why? Because everybody wants to have US dollar.
Correct.
Right? China is holding almost $1 trillion of US government bonds,
Right.
US treasuries, despite the kind of friction that is there between US and China currently.
Right.
Right? India, for its own reserve management, we are holding a large part of our reserves in the form of US treasuries. So, effectively, when the foreigners want to hold your currency or your assets denominated in your currency, because it is considered to be a stable, international currency, it creates its dynamic in terms of how the government can fund itself.
Right.
Right? It creates its dynamic about what you do when you have exchange rate issues or balance of payment issues. For example, US, if it is running a large current account deficit, it doesn't need to really worry so much about its currency because there are others who are willing to buy US dollar assets, right, to compensate for it. So these advantages of being able to manage your funding of the fiscal deficit and manage the exchange rate position and the reserve position very comfortably, because outside world is now willing to hold your currency and assets denominated in your currency, is the key advantage of internationalization of a currency.
Right. So just to kind of, I'm trying to put this in my own words, and I'm taking a very simplistic example. Let's say there is a country X which is buying goods from the US or selling goods to the US. Let's take the selling example. Let's say they sell $100 worth of goods to the US. So they get $100 with them. Now that country has the choice of either selling that dollars, converting into its own currency and doing something with it, or it would just keep that currency with itself. And typically when countries keep currency, like central banks keep currency with themselves, they would do it, they would invest it in the security of, like in this case, they would buy a US treasury. And so that $100 has gone back to fund the deficit of the US. And hence there is no pressure on either the dollar or on the deficit itself. It doesn't lead to other consequences, which, let's say, if India were to have a large fiscal deficit, because then people would not hold Indian dollars and they would,
Indian rupees.
Sorry, Indian rupees, and they would hence, hence there'll be pressure on the rupee, etc. So in your mind, if we can internationalize the rupee, hopefully some of that pressure on us also, okay.
So effectively, we are basically, what does internationalization mean?
Right.
Before I get into this, what does internationalization mean in a very simple term? Think of this as a situation in which you have some earnings and you have some costs. After paying for your costs, you have some savings. What do you do with your savings? What kind of asset would you like to buy with your savings? Basically, you want to keep your savings aside for your future needs.
Yep.
Right? And the kind of asset that you would want to buy with these savings is an asset that you basically trust.
Yes.
Right? An asset which you trust will retain its value over a long period of time.
Correct.
Historically, Indians used to love to buy gold.
Yes.
We used to love to buy real estate. Nowadays, people are shifting towards financial
Equities,
assets
yeah.
like mutual funds, etc., etc. So it's the same with currencies at the international level, at the country level.
Right.
If a country has surplus on its external accounts, which means that it has more foreign currency left after paying for what it needs to import, where does that country invest that foreign currency, right? It will typically tend to invest that foreign currency in a safe, deemed to be safe asset, which will retain its value. So if you can be one of that asset, obviously people would want to own you.
Right.
So that's the safety and desirability aspect of it. Coming back to the point of, sorry, we were discussing as to what's the benefit for the country, right? Financing. When somebody wants to hold your country's asset, they're effectively giving you money.
Right.
Right? They're effectively giving you purchasing power, which then makes it easier for you to do your own business. In the case of US, very simple, and I think this is again best explained by the US as an example, is the US government is today running a very large fiscal deficit, right? So they need to borrow almost $2 trillion worth from the markets every
year,
right? When they want to borrow this, of course, there are domestic US banks and domestic US institutions and US individuals who want to hold US treasuries. But because US is a reserve currency, there are outsiders, foreign central banks, outside investors who want to hold US treasuries. And they are also happy to buy. So when they buy US treasuries, they're effectively financing the government of US to spend that money in their domestic expenditure. So it's a financing of a fiscal deficit. Foreign demand of US treasuries is a big source of financing for US government.
Right.
That doesn't exist for us.
Right.
In fact, if we talked about this, index inclusion is happening currently. So foreign demand for Indian government bonds is only very recently starting to come in, right, with the index inclusion. And that should provide one. But in our case, it will be, say, maybe 5%
Right.
of total government borrowing. In US's case, it is much larger.
Right. Understood. Great. The other kind of angle that comes in, Neeraj, when we speak about this is more geopolitical, like you also mentioned it earlier, and specifically with reference to the recent Ukraine-Russia conflict. So also, if you can throw some light on that and why that also becomes critical.
Yeah, so this relates more to the trade aspect of it.
Right.
So far we were discussing the asset aspect of it,
right,
the ownership aspect of it. Now this is more about the trade aspect of it. Again, as we know that most of the trade is internationally domiciled in, denominated in US dollars or Euro, Euro, one of those currencies. For making payments globally, SWIFT is the largest network that operates. It's a network that connects banks and financial institutions and corporates all over the world. Right? So when we have to make payments abroad, we typically use SWIFT for sending out messages which result in the payments.
Right.
We all know that when Russia attacked Ukraine, there were sanctions imposed by the Western world, including by US, Europe, and some of the other countries, on Russian commodities such as oil, on dealing with Russian institutions. But an important sanction that was imposed on Russia was also that it was cut off from the SWIFT network. Right? So SWIFT is actually I'm a director on the board of SWIFT India. SWIFT is a global cooperative.
Right.
It is not owned by any individual. It is not owned by any financial institution, any country. It's a global ownership, which basic global banking system ownership. So to use SWIFT against a particular country, even in the context of a war, is a new dimension in what we call as weaponization of dollar.
Right.
Right? So not only US froze Russian assets, or European countries froze Russian assets, and you know they were no longer available to Russia for using, their access to the dollar payment system was also blocked. That was a bit of a wake-up call to many countries in the world to say that, and to realize that how dependent we are on a payment system which is largely dollar driven.
Right.
Right? Therefore, there has been a steady effort since then by most of the countries to create their own some sort of a payment alternatives to US dollar payment system, right? And we have basically, as a country, India has also tried to do this with many other countries in the world, including with Middle Eastern countries and some of the other Asian countries. So to my mind, the desire to internationalize rupee and desire to create a rupee-based financial ecosystem and a rupee-based trade system is also an effort in that direction.
Right.
To de-risk, and we are a large country, we are fifth largest economy in the world, so to de-risk ourselves from over-dependence on one currency and its payment system.
Right. Great. So there were two things here. I'll just maybe take some time to just elaborate and understand those a little better. First, the first point you mentioned is that just like India has $600+ billion of reserves, Russia also had, I think, $600 billion of reserves.
They also had almost 600 billion.
And then those reserves were held in many countries, but mostly in US dollars. And so some of it was, let's say, with the Fed, some of it was with some European countries, etc. The first sanction they put is they said that they will not let Russia access those reserves. So this is almost like you have your money in some bank, and now somebody has come and said that you can't access that money. So that is number one.
Yeah.
Number two, there is this payment system which is SWIFT. And actually, it'll be helpful maybe subsequently to just understand what exactly SWIFT is.
What does SWIFT do?
And what it is and so on and so forth. Just to, very simply from my perspective, SWIFT is where the dollar settlement happens and trade happens.
Actually, no. SWIFT is not. SWIFT is a global messaging system.
Sure.
Right? Just as when we have to message with each other, we use WhatsApp.
Yep.
You can think of SWIFT as WhatsApp of the financial system.
Yeah. It's kind of like UPI.
It's kind of like UPI.
But not in rupees. It's like in international trade.
It's kind of like UPI. It's kind of like WhatsApp. It's
Right.
a messaging system,
Yes.
right? So it's very simple that if I have to send dollars to you,
Yep.
and let's say you have an account with JP Morgan, and I need to tell JP Morgan that please transfer, say, $100 to Sameer's account, I need to send a message to JP Morgan.
Yep. And to debit your account.
To debit my account.
Yeah.
See, the action of debiting my account will be done by JP Morgan.
Right.
But I need to first, as an Axis Bank, I need to send the message to JP Morgan.
Yeah.
I have to tell them in some form and shape that you need to debit this account to credit Sameer's account. So how do we tell JP Morgan? And remember, this messaging has to be in a very secure format and dependent and reliable format, right?
Secure, and it has to be standardized because every bank has to talk in the same language.
Has to talk the same language, yeah. So this is what SWIFT does.
Yep.
So SWIFT operates a global messaging system which helps banks communicate with each other
Yep.
and facilitate these payments across entities,
Yep.
right? That was the core from which SWIFT started.
Yep.
Now SWIFT's role has also expanded to include messaging for trade transactions,
Yep.
right? For example, LCs can be exchanged
on SWIFT, yes.
Bank guarantees can be exchanged on SWIFT.
Yep.
So it's essentially is becoming a communication medium across the banks, or has become. So when you cut off a country's banks from SWIFT, you're effectively cutting them off from international transactions.
Yep.
You're effectively telling the rest of the world that nobody can make payment to that country, or the bank of that payment cannot make a payment or receive money from outside the world, right? So it's effectively, it's not just, it's like this. If I have to, think about this, you are owning an asset, let's say you own a house somewhere, right? And somebody were to impose a sanction on you to say that you cannot access that house is under seizure. That's one form of sanction. But the other thing is to say that you can't even leave your house. That's the second form of a sanction, right?
Yep.
So the fact that you can't leave your house is equivalent to the fact that you can't make payments and receive payments using SWIFT from these countries, right? So that's the core. That's the reason why SWIFT usage was SWIFT embargo was very, very critical in this case.
Right. Right. And hence, just extending that, so hence one of the thought process here is that if Indian trade is denominated in Indian rupees, then this threat is thwarted a little bit to the extent that, that trade can continue even if there is some geopolitical issue.
So, for example, if let's say we are importing crude oil from Saudi Arabia, and instead of saying that, okay, let's, pay you in US dollars, which requires me to send a message to JP Morgan to pay, I'm using JP Morgan as an example, but let's say US bank to pay to the Saudi Arabian counterpart, we can just tell them, hey, we will pay you in rupees.
In rupees, yes.
And the rupees will need to be settled in India because we don't need to go to US for settling rupees.
Yes.
All we can do is we can tell that Saudi Arabian exporter that, you have your account with me and I will just credit your accounts.
Yeah.
So I am actually not being very dependent on the international payment system for my imports.
Right. And this, I'm making a little digression, Neeraj, just for us to understand how this international payment happens. And so just to the best of my understanding, please correct me if I'm wrong. Let's say if company X in India wants to buy oil from Aramco in Saudi Arabia, company X's bank, let's say, which is Axis Bank, will send the message will go from obviously Axis Bank to Aramco or Aramco's bank saying that I want to, send so many dollars, please give so many dollars to Saudi Aramco. And this message will have to go through the US system. There will have to be a US kind of bank involved somewhere.
Right. That's right.
And so Axis Bank has an account with that
bank,
that US bank, in which there are some dollars, which then, Axis Bank is here taking money from company X to its account. And then in the US, Axis or whichever that counterparty bank is, their Axis Bank's account is being debited and the other bank's account is being credited.
That's right.
And this is how, dollar flow happens. The payment kind of happens. In the case of rupee, we don't need that bank at all.
Let me explain you. Why do we need to go to US for buying crude?
Yes.
Because we as an importer and Aramco as an exporter have agreed that we will invoice this in US dollars.
Correct.
Right? That's why we need to go to US. Right?
Correct.
If we were invoicing this in Europe, in euros, then we would be settling this in Europe.
In somewhere in Europe, yes.
Right?
Correct.
If we invoice this in,
rupee,
let's say, for example,
yen.
Take any other currency, yen, right?
So then we'll go to Japan.
Then we will go to Japan to settle it.
Yeah.
So the interesting thing about the currency is that whichever currency you invoice your trade in, you have to go to that geography to settle the trade.
Yep.
You have to use that geography's payment system and financial system to settle the trade.
Right.
Which basically means that if I am importing from let's say a Middle Eastern exporter, or I'm exporting palm oil, I'm importing palm oil from Indonesia.
Yep.
And we start settling in US dollars, we have to go to US dollar financial system to settle that trade.
Right.
But if instead of using US dollars, if we were to use rupees, then the settlement will happen in India.
Yep.
Or if we were to use Indonesian rupees, then the settlement will happen in Indonesia. We have nothing to do with US dollar in that case. Right?
And then the jurisdiction is of India or of Indonesia, and hence
it's either the exporter's jurisdiction or an importer's jurisdiction. It's not a third party jurisdiction, right?
Right.
So that's a very important feature of internationalization of rupee. It's not just about foreigners or non-residents holding Indian rupee assets. It's also about the payments or the settlements of these transactions happening in Indian financial system, in our jurisdiction, in India time. Right? And therefore, onshoring of the flows in some senses.
Absolutely. But there is a very important stakeholder here, without whose concurrence this will never happen. which is the counterparty.
Yes.
The person that we are either who's selling to us or who's buying from us.
Yes.
So why would a counterparty do this?
So nostro and vostro. Nostro means my account with you. Vostro means your account with me.
We want to internationalize, but what will it take for the Indian rupee to become an international currency? For running their day-to-day business, they don't need to have any. There are no constraints, except obviously if you are doing something really bad, then that's
no. But there are certain items which you can't just import.
Which you can't. Yeah,
prohibited
exactly.
items are there. For example, you can't import nuclear fission material.
Which has got nothing to do with the foreign exchange. It is just
it's
the
a government
commodity
policy.
itself.
It's a commodity policy, right? So therefore, to that extent, today we say that by and large, rupee is current account convertible. Therefore, in my mind, I think we are on the right path. But like you said, it's not an event that happens overnight. It's something which will happen over a period of time as international community gathers more confidence about our economy and our currency.